Hey guys, so welcome back to my YouTube channel. I stand capital right here, back on it. Today I want to teach you guys something, how to use confirmation entries in your whatever in your trade, right? I want to teach you guys something about first red day setups, first red day setup. These are very good this thing. First red day, we also have first green day, first red day setups, and how I use them. So let's say we've been fucking bearish, right? Been fucking bearish for a while. The market pops up one day, 2 day, and then what happens? You have a red day. What's a red day? A red day is the day where the market closes below the open. If red day, the first red day is the day a market closes below the open, below its open for the day. You get what I mean? Let's say the market opens here, right? Does everything is doing, comes there, and then it closes around here. This is a first trade. It's like candles too, you know. Bearish candle, a red candle is what? A candle that closes below the open. So the same thing for days. Do you understand? Same thing for days. So that is the first trade day. First trade day is the first day where the market closes below its open. Now I want to see a pump day before the first red day, where the market has been green, right? And then we have what? A first red day. So once I have a first red day, I look for 110. I want to trade when during the New York session. I start looking at my chart from the start of the New York session. When is that? That is the 1 p.m. GMT. 1 p.m. GMT. So let me just say something right now. Say something right now. So the GMT. Okay. All right, know what? Yeah, 1 p.m. GMT. So my time right now is GMT plus 1. I know that we're using UK time, right? So right now we are at the same time with UK. Basically, you can see simply London now is UTC plus 1, right? But a normal day it will be 0. So I think there is daylight savings. So it happens sometimes. So you just know that 1 p.m. GMT, that is when the New York starts. So in my own time, Nigeria, that is 1 p.m. Nigerian time. Do you understand? So my chart is set to that timing. So anyways, that's when I want to start looking at the chart. I want to see what a break of structure. I want to see break of structure to the downside. The market basically, I want to see break of structure to the downside. I also want to see break of structure. I want to see the market go back to where? To closing price. Back to closing price. So what's the closing price? Closing price is where the area, right, where the market closed for the previous day. So now this first red day, where the market closed, this is the first red. This is the closing price. So that is the closing price. Do you understand? So my trading day is the next day. I trade on the next day. So this one gives me the what? The alert that you know what? There could be a sell on this day. So that is the first red day. And now the next day I want to look for sell. Now, very busy stuff. I start trading. This works for US oil, US 30 and NASDAQ. Basically indices and commodities. Do you understand? So very important. Now for indices, you need to look at 1:30 p.m. GMT, 1:30 p.m. GMT, or 2:30 p.m. Nigerian time. For US oil or other or stuff like oil and other things, you start looking at 2 p.m. Nigerian time. 2 p.m. and I made mistake before. 2 p.m. Nigerian time or 1 p.m. GMT. If you're looking at trading indices using the same strategy, start looking from where? 1:30 p.m. GMT or 2:30 p.m. Nigerian time. I know I'm saying that because you want to start trading once the markets open, once the equity market open, or once the next session opens. So anyway, let's go back to what I'm trying to say. You've identified the first trade day, you got your breakout structure, you must be priced to do what, to pull back to what, closing price. That closing price is like a magnet. It acts like a magnet. That's what you want to do. So basically, once you got what in that, sorry. Once you've gotten that here, now want to use your three confirmation, the three candle pattern where you have two bullish candles. Now this is for a sell scenario, of course. You have two bullish candles or three bullish candles. That is what you're looking for your entries. Three bullish candles and one engulfing candle. You change the color to make it different. Right. So this is what you want to see as your entry. Where will your entry be? You enter once the candle forms, once this engulfing forms, right? Stop loss above the engulfing. Same thing for here, when the engulfing forms, stop loss above the engulfing. Now, I'd like to see this one more, but if I see this one, I take it. Do you understand? I take it too. So two bullish candles or three bullish candles is what you're looking for. And then the final confirmation is what the engulfing pattern, the bearish engulfing. Now, let me add this one. If you see a bearish engulfing like this with a pin, with a bar, the wick to the upside, this wick to the upside shows what? Bearish rejection or bias rejection. It's rejecting the bias. It's rejecting the what? The bias, and it's what? Showing us bearish engulfing. This is a very, very strong candle. This is like, if you see this one, you have the permission to like, no, let me not say that. I want to say I would mention like increase your risk or anything. Use your normal risk, and do not trade based on emotion. So I want to see what reconstruction on trading during my time window. I want market to go back to pull out to what closing price, and then do what gives me my final confirmation. So let's go to the chart right now and see what I'm trying to say. So there are different things. There are different what's it called? Different ways to trade. So I'll just show you one example right now. Now you can see the market. This is Tuesday. So this is Monday. Monday started from here. This is Monday. Right, and this is Friday. Right, so you can see on Monday we stayed inside. We stayed inside the previous week, the higher low of the previous week. Right, this is like the low of the previous week. That liquidity has not been taken out, and this is the high of the previous week. So now we came on Monday, we stayed inside. Tuesday went to the low of the previous week, right? Took out that sell-side liquidity, and then gave us, and then this is like day one of the pump, day two of the pump, day three, and what happened? It closed as a first trade day. How do I know that? This is where the market opened on Thursday, right? And this is where it closed. So you can see the market closed below its open, right? The market closed below its open. So that gives us what? A first red day, right? That gives us a first red day. Now, as I got that first red signal, I was like, okay, it's time to sell, right? It's time to sell. I actually alerted my VF member saying, you know what, we're going to have a good sell today on US oil. And I was waiting patiently, right? Now, let's do not get food, right? Let's look at this charts. I go to the 45-minute time. On the 45-minute time frame, you can see you basically add a what? Bearish candle 1, bearish candle 2, bearish candle 3, a bullish signal to buy. Now, this happens where? This happened when? This is 12:15 p.m. Nigerian time. And I told you that you want to see your pattern form during what? During what? 2 p.m. Nigerian time. 2 p.m. Nigerian time. Very, very important. 2 p.m. Nigerian time. It's very, very important that you do so, right? Because there could be manipulation on that from that 2 p.m. And now look at what happened right here. Let's go to 15 minutes time frame. This candle was what? Only 2 p.m. This is 2 p.m. candle. So basically, if you've taken, if you took the sell, if you took the buy rather, right, you have been in small profits around 10, 20 pips. And what happens on that 15 minutes, that opening of the New York market, what happened? Boom, straight down, cleaning all your stop losses, everything. Because that first candle, boom, second candle, boom. That was our breakout structure. That is what I'm looking for. That's what I come to this. I come to the screen by this time. And when I come to the screen, I've seen my BH candle. I say, okay, very good. I've seen the breakout structure. I say, very good, right? Because basically, overall, what I bearish, I think, we're very bearish on US oil. Yeah, we'll be bearish on US oil. We've gone down, we've gone up, retraced, we've gone down, we've retraced. We've not made any higher high, right? We've not made any higher high yet. No highs have been taken out. The market has basically been making what? Lower lows, lower high, lower lows, and what happened? You're expecting what? Lower highs, right? Although to not cannot break structure, then we start going, back. That's a talk for another day. But for us understanding this strategy, this method of trading, you got to what? Your breakout structure, you're trading your timing window. The next thing you need to look out for is what? Your closing price. Where's closing price? This is closing price, right? Because my line is still there from Friday, right? So this is basically your closing price. So just like a zone or something, because yeah. So that is the area you want to sell from. That is your strike zone. Now you could use a limit. I don't advise it because the markets could still go up and everything. Just need to use that confirmation, that 3 candle confirmation. That's what I use. Because basically there's a fair value gap right here. Of course, you could have used a sell. Just put it around here. Put your stop loss around here. This is around almost 40 pips, right? And then target for 3 hour. Of course, you can do that. But this 3 candle formation is very powerful because the win rate is very, very high, right? It's very, very high. The win rate is very high. So go down to 15 minutes time frame. This is 15 minutes time frame, I think. Okay. Okay. Yeah, this is 15 minutes time frame. Now, candle 1, candle 2. Is this an engulfing candle? No, that's not an engulfing candle. And what happens again? Market goes down, start pumping back up. That's when you now go to the lower time frame again. Go to the 5-minute time frame. Now, on the 5-minute time frame, what can you see? You can see the market has already made this M formation, right? It has broken structure again. And then what happens? It spawns back. Candle 1 bullish, candle 2 bullish, candle 3 bearish engulfing. Bearish engulfing with a what? Bullish rejection. Rejecting the bias, bearish engulfing. That is your entry. So instead of 10 something pips top or something, you are using 15 pips max. You target just this low, just that low, should be getting 3.7 hour, 3.4 hour rather on that trade, 3.4 hour on the trade or 3.3 hour on that trade. Do you understand? So that's the beauty of this pattern. Like I say, market just kept going. And where is market? What was market going to? I told you, just using normal basic social knowledge, right? Just using basic social knowledge. You can see high to low retracement, lower low retracement. Where is it going to? It's going to this low again. And as soon as it took that low, it made what? A lower low. So we expect what? Another retracement, and then we'll continue possibly. That's what basic market structure. But now I'm just talking about entries. So now you can go about backtest this strategy very, very well. Backtest is like your life depends on it because actually it does, right? the closing price is it's like a magnet. This is like a magnet. Look at this one again. It's like this is closing price. And what happens? You see your three candle combination, candle one, candle two, candle three. But I didn't take this trade because it's what? It's 11 o'clock. It's 11 o'clock candle, 1 hour candle. But you can see it's a very, very strong place for that you should be trading. It's a very, very strong place that you should look at this one again. This is the closing price. Where do you think that rejection came from? Closing price. Let's look at Friday, 12th of July. Let's go on the 15 minutes time frame. Just to observe. Let me see. This actually work there. Of course, it's I want to work there. So this closing price, what happens? Come on the one, candle two, candle three, boom. Do you understand? So that you guys need to expect closing price, breakup structure, timing, everything. They go hand in hand. They go hand in hand. Trust me. So I think this is where I will just end the video. If you guys like this content, if you guys like this content, like the video. Make sure you hit that like button to help your algorithm. Subscribe when you subscribe, so you see more videos like this, more educational videos like this. Because this channel is strictly for education. Do you understand? And if you want to join I have a free community where traders are there, they interact. I post my setups, I give free signals. If you want to join that, the link is in the description of this video. Just like the description, you see the link right there to my Telegram, my Twitter. There, you can follow me on Twitter. I'm very active on Twitter, so you can ask me any questions. And if you have any promotion or any deals for me, message me on Twitter or on Telegram. Peace.